But shifting focus to the commodity markets, we have Manisha Gupta joining in to give us a quick word on that. Manisha, what are you tracking now?
Sonia, I'm looking at the gold prices because a very smart rebound is what we are dealing with in the overnight markets. 2% up, which has been the biggest day gain that we have seen come in for last 2 months, really. And the prices did see all the way up to $1660 per ounce on the higher side after hitting a low of $1615 on the weaker side. So it has been a good $40-45 of a jump up from the intraday lows that we put in case of the gold prices yesterday. A couple of factors which have been supportive. As I said, this has been the biggest one-day gain in 2 months that we've seen come in case of the gold prices. The gains have come in as we have seen a decline in US dollar. But even with the kind of gains that we are working with, the gold is still headed for a sixth monthly decline, that is. The dollar index, after hitting 114.6 kind of levels on the higher side, not only broke below 114, but 113 also at one point in time is when we saw those gains come in for the gold prices. Also, the bearish bets are the highest in last 4 years. So there has been some squeeze, some winding of positions also that the gold prices seem to be dealing with. The US pending house sales were down 2% in the month of August. So all the economic data continues to be on the weaker side. That in turn has led to some buying in case of gold. The Bank of England has started new emergency quantitative easing. So there is more money, easy money coming in, at least in UK, that also in some sense supported the gold prices. But having said that, it really is going to be about the US GDP data, which the markets are awaiting right now. Minus 0.6% has been factored in. Anything less than that is something that could actually be yet another reason for the gold prices to gain up. If you look at the range that we've seen in case of gold prices in the international markets, we're down by 9% in current year, and the range has been from 2052 of a high to around 1615, a level that we saw in the markets yesterday. For the Indian markets, because of the rupee depreciation, this range has been cushioned. So we are down just about 1.5% in this current year, but the range has been huge, almost like 6,000 to 7,000 rupees, from 55,000 on the higher side to 47,000 on the lower side, currently just about holding close to that 50,000 rupees per 10 grams there. More importantly, on how gold prices are going to perform going forward, there is still some bearishness here. Swiss Quote expects the gold prices to test $1,600 per ounce on the lower side. You have similar views coming in from TD and Bank of America as well. RBC, for one, expects the gold prices to go down to 1663 by the end of this year. But they are bullish going forward and they expect higher prices. ING as well expects this year to end by 1650, but for next year they expect 1900 kind of levels as well coming in. That's a similar view that we have seen, as I said, coming in from other banks as well. BMO Capital Markets, 1649 is what they see as an average for the next year as well. So this year and the first half of next year, the gold prices actually could be cut in a range.
Okay, thanks a lot, Manisha, for that. But